Hello, I'm Juliet Sarli. In this week's edition of IG Macro Intelligence, we take a look at August reporting season highlights and lowlights. August company reporting season has come to an end, with analysts labelling it one of the most volatile on record. Morningstar points to the standard deviation of price changes exceeding 10% on results day, with wild price swings not just contained to small caps. Blue chip stocks like CSL, James Hardie and Woolworths all plunged in the aftermath of their results, with CSL posting its worst day since listing. In fact, 7 of the biggest ASX 50 companies dropped more than 10% on their earnings release day.
It was. I mean, we saw some once-in-a-generation moves for ASX large cap blue chip stalwarts. CSL, James Hardie, Woolworths, we haven't seen moves like that. In the case of CSL since it listed, James Hardie about 50 years, Woolworths about 30 years. Massive swings. We're used to seeing that amongst the small cap end of the market in reporting season. We're not used to seeing anything like that for the large cap stock.
Morningstar highlights that passive trading and algorithmic traders amplified the market noise, although companies which disappointed the market bore the brunt of the selling. CSL shares are down more than 30% over the past 12 months, and ASX TradeWatch data highlight they're in a long-term bearish trend.
CSL has always been a market darling, so if it misses by just a little bit, it gets slaughtered. James Hardie, no one ever trusts that company because of what happened a decade or so ago. So I would consider those outliers. Most companies got to reporting season and didn't have much that they would surprise the market with. Incidentally, there's probably another bad year for CSL where that came from.
And Ord Minnett has downgraded CSL from a buy to a hold in the wake of its results, citing concerns around CSL's plan to spin off its Seqirus vaccine business by full year 26, along with abandoning its previous 3 to 5 year timeline for the Behring margin recovery. Ord Minnett has a $258 price target on the stock, though it suggests it can rally around 22% from current levels. Citi and UBS see fair value closer to $300. In fact, most brokers are positive on the stock, with the average price target on CSL a buy and a price target of $286.17. And that suggests CSL can gain back this past year's 30% loss and more.
Look at the price action; it's very, bearish at the moment.
Right
now, I expect there will be a technical bounce.
Right.
How much of a technical bounce is anybody's guess? But there's been a real sentiment damage here, in the stock.
Yeah.
So it's going to take some time to recover. I believe when you see this kind of fallout, it doesn't just bounce back to where it was overnight.
Well, NextDC skyrocketed in the aftermath of its full-year results. Its full-year revenue was up 6%, underpinned by a record level of new contract sales.
We're in the single most significant transformation in the history of infrastructure. Think about the journey of industrial revolutions, steam, electricity, the internet, and the fourth, ultimately the industrial revolution, the transformation of what we're going to see in underlying compute will be like no time in history. Now, obviously, organizations like NVIDIA, if you look at that now being the most valuable company in the world, gives us some insight into the insatiable demand for GPUs to support the growth of artificial intelligence. And whilst funding that growth may be challenging, ensuring that we can deploy that capital in a way that's highly efficient for our shareholders is a value creating opportunity. So I look at the benefit of being a public listed company as saying that we'll be able to reward our shareholders for continuing to grow into the single most significant thematic in history.
Well, NextDC shares are only modestly higher over the past 12 months, but ASX TradeWatch technical data show shares are in a near-term uptrend, as confirmed by the 20-day moving average, which is rising, and that implies investors see opportunity for profit. The outlook for the stock looks bright, analysts overwhelmingly positive. Morgan Stanley, which has an overweight rating, is tipping NextDC will retain its premium valuation relative to Australian and US listed data center peers, due to its larger development pipeline and relatively higher growth rates. And Pendal also upbeat.
Spending almost $2 billion on CapEx per year in this business and getting mid to high teens returns on that capital. So it's a business that we are very high conviction long term. And we think that when we think about valuation, they've got contracts today which more than double the business. When we put that on a multiple, it's trading about 25 times contracted EBITDA. And you compare that with transaction. So then you compare that with, well, what do you think a business which is X growth should be trading at? So maybe 20 times. So really, this is a business that you're paying 25 times for, and it's basically telling you it's pricing in limited growth over the medium to long term. And we think the growth dynamic is very positive.
Well, the average price target on NextDC is $20.61, according to Refinitiv, suggesting it can rise a further 23%. Meanwhile, Luke Winchester from Merewether Capital says one of the key takeaways of the volatile reporting season was the outperformance of the small end of town.
You look at those big downward moves and they're headlined by your CSLs, your James Hardys, your Woolworths, some real large cap names. And I think there's been a bit positive sentiment in the small caps, a rotation maybe. Most of those big winners we rattled off before are all in that sort of small mid cap space. Like your Life 360 had a good result, Super Retail, NextDC. And as small micro cap managers, we've been lamenting this market for a couple of years, this valuation gap where large caps just keep grinding, CBA leading the charge, and sort of when are we going to have that mean reversion? And maybe this reporting season is the start of that.
And that is your IG Macro Intelligence for this week. We'll see you next week.